Good morning to you both. Perhaps I'll call it a middling day for the markets to start off this new month and this new quarter with the S&P basically just above the flat line, 45.35 there. Binky, I'll start with you. Your take on the jobs report we got today and what we are seeing in terms of a market reaction to start a new quarter.
Hi, Morgan. Thanks for having me. In terms of, the jobs report, I'd say it's what we basically expected. Suggests that, the economy is in pretty good, strong shape. Certainly increases the likelihood of 50 basis points hike. In terms of the markets, what I would basically say is, the other key issue, of course, has been really the geopolitical escalation in Russia, Ukraine. And I think that basically, the market sort of worked its way through what would be the typical trajectory, basically, around those events already. So if you look at where the market was on February 10th close before President Biden's speech on February 11th, warning of, imminent invasion. We were sort of round numbers at 4,500, which is kind of where we are this morning. This sort of fits, 3 weeks down, 3 weeks back up, 6 to 8% down is typical historical pattern. So I would argue, the market sort of pretty much worked its way through that. And so, the main issue now is really basically, the Fed hiking cycle and what that does. We see first year of Fed rate hikes as, associated with basically positive returns in the S&P. It's pretty solid. Out of 10 out of the 11 Fed hiking cycles have seen the market up 1 year later. So I'd say, yes, 50 basis points hikes, but, relative to past, historical hiking cycles, it's still relatively modest. And so, I think, I would stick with the historical guide saying things are okay. And, equity should be fine.
Yeah. David, I'll put the same question to you, especially given the rally we have seen in equities in recent days, recent weeks. Is it for real?
Yes, I think the equity market rally can continue, but I think everybody needs to focus on the fact that interest rates are going to go higher. What really jumped out at me in this report, and I know Steve was talking about 700,000 people came back into the labor force in the last 2 months, and that's good. The problem is that 700,000 is more or less equal to the number of people who said that they weren't staying out of the labor market because of the pandemic. So what we had is a big decline in people who are scared of the pandemic. Now, there's still 900,000 people who are not in the labor force because of the pandemic, and we'll get those people back. The problem is that there are now 5.3 million more job openings than unemployed workers, and there's no way of closing that gap. And the Fed is forecasting 3.5% unemployment by the end of the year. We're going to undershoot that. So I think what we're looking at is the labor market continuing to tighten more than the Fed expects. Strong wage gains. I think the Fed is going to be aggressive on raising interest rates. So the equity market can do okay, but I think you've really got to focus on what's going to do well in a pretty rapidly rising interest rate environment.
Binky, I wonder, given all the strength that David just mentioned, we just got ISM slowing down. We're watching housing slowing down. We're getting more analyst calls about slowing in consumer electronics and demand. Is the phrase Fed hiking into a slowdown a fair phrase?
It's definitely accurate to say, as pretty much everybody on the channel this morning has said that the Fed is far behind. The way I would put it is the Fed is hiking at a much later stage, basically, in the economic cycle. And we don't have, sort of a lot of experience with that. And so, yes, I think that basically, if the intent of rate hikes is to slow growth, that's slow inflation, and growth is already slowing, because we're just coming off the boil in terms of rates of growth as activity levels, sort of get back to sort of trend levels. It is even more challenging. And so, one of the key questions is, will they be able to stick with, sort of this very rapid pace when, the ISMs like this morning are coming down, which they should be coming down, but it's always difficult to do things against, a trajectory or a baseline, because what is the baseline? What is the impact? What is the noise? It's a challenge. Yeah.